Todd Schoenberger, managing principal at Black Bay Group. Welcome back to Street Smart, Todd. Always a pleasure to see you.
Thank
You've
you for
been pretty concerned about this market for some time now.
Yep.
Looks like some of those concerns are coming to fruition.
Well, it's better to be lucky than good. I mean, that's first of all, let's just say that. But look, the European headlines are clearly what's influencing the market right now, the market action. We're past earnings season. Now, we have to hope that maybe we'll have further accommodation from the Fed. If we don't get it, it's all about Europe right now.
You say you have to hope. You really think the Fed can do much more here? I mean, you think QE3 is in the works? And if so, what does it matter? QE1 and QE2 didn't really work.
Well, they didn't. However, they helped the stock market, though, because they do manufacture wealth, or they give the wealth effect. They improve it for the American consumer. If you look at the GDP rates following those QE launches, you actually saw a pop with GDP. So it does help because it causes people to go out and spend, whether they have the money or not. That's good. However, look, I'm a trader. I'm not a politician. So I want QE 3, 4, and 5 because I think it's going to be great for the stock market.
And what's your thought about this concern in the market today that Spanish banks may get downgraded?
Yeah, well, look at the run on the Spanish banks. I mean, we haven't really been talking about it because all the news is out of Greece right now. Look, I'm not shocked by that, and you really need to start. I mean, look, it's a cancer. It just cannot be cured anytime soon. So you look at Greece, you look at Spain, you just think of the ancillary countries. The European debt bombs are monumental, and it's impacting China. Because remember, China's #1 consumer is Europe, and how is that going to impact China when you look at their lower GDP? Right. And then are they going to be in position to actually buy our U.S. Treasuries? Remember, this is a U.S. government that's borrowing 40 cents on a dollar to cover overhead costs.
Do you see this playing out as a huge contagion issue? I mean, are we going to start to see significant problems that affect our financial institutions back here at home as well?
Okay, so you have, $1.5 trillion of European debt that's held by European governments and the IMF. Then you have another $500 billion that's held by the bulge bracket money center banks here in New York.
Which,
yes,
by the way, quote unquote, is hedged, right?
Oh,
okay. Good one, Adam.
That is good. But I got to tell you, though, guys,
Yikes.
I mean, I hate to, I mean, it is a vicious cycle. And you get some of the bears that are on there. You get Nouriel Roubini. Everybody's talking about these doom and gloom scenarios, but unfortunately, it's about debt. That is the common denominator, and the problem is that with so much debt in that region and also here in the U.S., something's going to catch up, and that's what we're seeing right now. Look, I'm going to say this with a smile on my face, though.
Right.
I mean, so there's going to be some optimism there.
Well, and part
somewhere.
of the optimism is being smart enough to play it the right way and being ahead of the curve. So with all this in mind and this sort of doomsday scenario lurking in your mind anyway, Todd, how do you position yourself?
Well, look, I mean, the gold trade today is fantastic, but keep in mind, gold has been taking it on the chin all month. I mean, the Dow Jones Precious Metals Index is down something like 17% for the month. I mean, going into today. So we're seeing a rally there, which is nice, but you brought it up best, Adam. I mean, it clearly is on, QE3 is in play right now. Bonds are rallying as well today. I mean, there is some sense that look, Bernanke and company are going to end up doing something in the third quarter. Forget about politics, just try to remove that. I think we need some type of intervention because there's nothing organic.
And you've been short stocks, correct? You've been long gold, short stocks. So you actually have called it reasonably well, with the exception of gold.
We've been doing pretty well, actually. Yeah, exceptionally well. But I mean, with gold right now, today is actually our first day of the month we've actually seen a gain.
Are you the only one thinking, though, that there's going to be QE3? Because you look at this market, and I'm looking at red right across the board there on the Dow.
You bring up an excellent point.
And the Nasdaq, fifth day of losses. Clearly, the rest of the market is not seeing QE3.
You bring up an excellent point. I mean, I would feel stronger about that argument if the stock market was rallying on this news. And I haven't seen it. But yet again, look at gold. I mean, with all the uncertainty out there, you would think gold would have been over $2,000 an ounce right now.
The dollar's getting hurt a bit today for the first time in days,
I tell you
weeks.
What, you know what's clear about everything, though, in this gold trade this year is cash is king, and that's what we need to focus on. I mean, there's so much cash that's out there on the table, and not a lot of people are doing stuff with it.
Todd, what's your reaction to that? I mean, it looks like what Adam's telling us basically is that there's not as much fear out there in the system. If there were more fear, it would be more expensive, more costly for these banks to transfer their euros into dollars.
And you also have the safety net that's out there, so let's keep that in mind. I mean, look, would you buy the U.S. banks right now? I think that would be a good question. You may want to stay away from there, only because of the J.P. Morgan story that we're hearing about. Look, banks have not done well.
Does that taint all banks? I mean,
does it taint the regionals? Yeah.
Oh, not the regionals, but look, you look at these Spanish banks. I mean, they're having a run on these banks, and we're not talking about these stories. I mean, you had the Spanish bank. There's Spanish nationalized bank that had 1 billion euros that were run on this bank that were withdrawn from this bank
what
in
about,
1 week.
What about some of the Swiss banks, Julius Baer, the Swedish banks, Handelsbanken, where they're well capitalized?
I just got to get back to this issue of why. I mean, you just showed us that there's not a huge premium as we've previously seen, changing your euros into dollars. If there's this huge run on the banks, why aren't we seeing this show up in the data that Adam just showed us?
Trish, you bring up a very valid point. However, when you have the safety net known as the IMF, I mean, they have $350 billion in cash right now. They're looking to raise even more money for potential bailouts. Look, you can look at that. You can look at the governments that are there. You can look at the United States government. Look, that's why.
So in other words,
premium.
It's the IMF, you're saying, or perhaps the ECB, that's artificially keeping that swap rate low.
Well, let's be honest. We've in this country, even over there, I mean, we've been jaded enough to know that if you have a bank that is failing or is becoming so paralyzed that they can't do anything and they're going to have a run on their assets, what happens? Well, you go hand in hand. You go to the government. You get some money. You go to the IMF. You get some money. It has happened. We've seen that. Investors, they're smart enough to realize that as well.